Hey, what's going on, everybody? Christopher Inks with Texas West Capital coming at y'all live here on Friday. Oh, what is today? July 11th, 2025, just about a week after the 4th of July. And we've had fireworks here the last couple of days with Bitcoin. So good to see y'all here. Hey, listen, before we get going, hit the thumbs up, hit the like, hit the subscribe. Follow me, TX West Capital there on X. And I don't know how many of y'all know, but I do a plethora of free content all throughout the week. I do multiple newsletters, so you can get signed up for those. You can go to themarketbreakdown.com and sign up for that one. They should be shown in there as well. Recommended. That's a daily newsletter. It comes out Monday through Fridays. I do the Applied Socioeconomic Theory newsletter, which goes out on Friday, so it'll go out later today. And you can get that at socioeconomictheory.substack.com. I post a daily 1 minute or less read to help you be a better trader. It's just one concept, one idea, one thing every day. And I discuss it real quick and give you a tiny action that you can do there. And that's 7 days a week. That's at tradersedgedaily.substack.com. God, I know I'm probably going to forget some there. I also do, just recently, I launched Hash and Hedge, which you can get right now at hashandhedge.substack.com. Soon you'll be able to get it at hashandhedge.com. But yeah, so the Hash and Hedge is pretty great. Hash and Hedge is more of a personal thing to me. I'm going to get, I've started doing my longer form thoughts on Bitcoin, proof of work, hash rate as defense, against cybersecurity, for cybersecurity, against cyber warfare, stuff like that. Kind of just expanding on things that Major Lowry spoke about in his Soft War book. If you guys haven't read that, you need to read it. If you're in Bitcoin purely because you think, oh, I make money on whatever, you're missing it. You're into something much, much bigger, guys. And so, yeah, I mean, I'm telling you, if you're not thinking beyond that, and we try to expand your thought on that every Wednesday on the Beards and Bitcoin show, where we look at different angles of Bitcoin and whatnot. More lately, we've been talking more about the financial side of it because it's been the biggest news. But again, we try to look at all these different things and help you understand what exactly you're getting with Bitcoin. Bitcoin is more than simply, price go up, right? It's more than protection against inflating currencies, right? Because the Bitcoin miners themselves use that proof of work, which takes energy. And at the end of the day, it becomes he who gets the most energy, he who brings in the most hash rate, because you can't undo things that have been done, right? You can't spend all that energy that was created to get to that point to move it back. And so there's just so much more to talk about it. So I'm going to be, talking about that a lot more with Hash and Hedge. So I think you guys should really, if you're interested in just growing and learning, I think that's a great place to start. I'll also be giving more, longer form thoughts about markets and, economic stuff like that, as well as my writing, as well as writing in general. So you'll probably hear more about things I'm about to put out and things I'm currently writing. And I might even ask for your opinion on stuff, that kind of relates to all this. I write about markets. I write about protocols, about Bitcoin, about hash power, all that kind of stuff, in speculative type fiction or techno thriller type fiction. So a lot of really good stuff there, even some horror in there. You guys are going to be having fun with that maybe when we do that, when we post that. So a lot of stuff there. But anyway, it's almost all of that is free. We do have a paid version of the market breakdown called the weekend hot sheet, which goes out on Saturdays. And we give you at least five stock and 5 crypto trades that we're looking at, that we're looking to hopefully, hit 20% on within, 14 to 30 days. And then we update that on Wednesdays. We update the positions on that, and as well as give you a risk gauge and all that kind of stuff, so you understand markets better that are coming up. We're actually doing pretty well on that. We're up. I can't remember exactly how much we're up at the moment here, but Our Nvidia just hit, which was absolutely great. CRWD's hitting or is about to hit, TSM as well. Just numerous ones. And then, of course, with our crypto trades as well, especially now with the market finally turning around and moving on that. So we're going to talk about alts today as well. We'll talk about Bitcoin, take a look at Ethereum, all these great kind of things, give you guys an idea. But here's the thing, guys. I guess it was about 2 weeks ago, I did this show and I said, did you buy the dip? Right? You guys remember that? And, I talked about why you should have bought the dip. And I'm talking about the dip, that most recent dip back here on, what is that day there? See if I can get this streaming thing out of the way. Right there on June 22nd. Yeah, so the previous week we had that dip there below the range low where we had talked about when it was coming up. Talked about that's where you should be looking to likely buy. And it went up there. And I got surprisingly, I got a bit of negative feedback. Oh, you're so stupid for buying the dip, blah, blah, blah. After that show. And yet here we are, right? Racing to 120,000. How many of you guys are in on this right now? Guys, gals, otherwise in here. How many of y'all are in on that? I mean, we popped out above Bitcoin there, above the range high, the previous all-time high there. And, in just in 2 days here, it's not even been 2 days yet, up 6%, $6,770 and some change, coming up there to about 118,800 and some change. I mean, holy crud. Yeah, people do love complaining. That's for sure. Let's see. Andrew says he bought the dip. Yeah. He says, I really hope the people in TWC were getting the XRP Bitcoin early indicator that you posted there. Yeah. And XRP itself, what a push it had as well, popping out there. I think it looks like to me, Bitcoin's or XRP is actually XRP, USDT is probably running up there toward $5 now after today's the push that we got there. So lots of potential on it, but I think people are going to be so dang shell shocked. They got a lot of PTSD because alts haven't been doing what they've expected. So they've already missed the first bounce on a lot of the alts already. And now we're popping up here higher and they didn't buy the breakout on that. I think alts are probably going to continue rallying pretty good before retail generally starts actually getting into it because they're so scared it's going to go back down again. And let's face it, most of the people in the market have no clue what they're doing, right? So if you don't know what you're doing and you've already been burned multiple times trying to get in, it's kind of hard to convince yourself to get in. I think y'all can feel that, right? I know I felt that when I first got in the markets. We didn't have crypto back then in 95, but, we had pretty much everything else there. Again, when you learn to read the markets, you learn to read that liquidity cartography, right? Where is liquidity setting up on the charts? Where is it potentially going to be setting up? When you can figure that out and you get used to it, and it's not even just figuring it out first, because then you have to go through it multiple times to convince yourself that you're doing it right. But once you do, holy crud, all of a sudden, the really small time frames are just noise. Larger time frames, bigger picture. So you guys have had to deal with people constantly yamming down your throat about how the Bitcoin top is in, right? How many times has that happened over the last few years now? It's like every single time a new high has been hit where it's taken a little bit of a pullback, it's taken a little time on the pullback. Everybody and their grandmother out there, oh, the top's in, the top in, the top's in, the top's in. Oh my God. I honestly, if I was starting trading today and I was on social media, I'm not sure that I could really figure out how to trade properly. Really figure out how to make some money because there's so much, most of it's just nonsense. But those accounts are so loud that they kind of really drag on you, right? Because at the end of the day, we buy and sell everything based on emotion. That's what it is. And when you've got, people yammering in your ear, oh, it's this, and, listen to all them large accounts, it's hard to do something different. It's hard to break away and be your own person. Okay. Let me see here. Ross, what's going on? He says, looking at Bitcoin's historical impulse moves up, it feels like 3 to 5%. still isn't really that much despite the higher price tag. Greed index still looks around 60s, correct? Much room to run. That's exactly it, Ross. It is just a small, we'll look at the charts here in a minute, but it's really nothing, guys. In the grand scheme of things, I think the biggest part that that retail has with this current push now, or even Bitcoin's price at around 100,000, is the number. They can't wrap their heads around, because for most of the people looking in there, $100,000 is a lot of dang money, right? It's not $1,000, it's not $100, right? So people didn't get in at 100,000 because they thought, oh, it's a scam and it's a joke and it's going to crash. Now they won't get into 100,000 because, oh my God, it's so much. What are we going to do? But that's why I'm trying to say, at the beginning here, Bitcoin is more than number go up. Okay. It's there to protect what you already have. Doesn't matter how little you may feel it is. I mean, again, a lot of people, they get in, they're like, oh, I only have a few bucks, so I'm just going to YOLO in. Why would you do that? Why wouldn't you learn how to take that little bit over time into something much, much more significant? Because you want to get rich overnight, right? And that's tough. It's a hard thing to kind of work yourself through as a human being, just getting through that emotion. But I promise you right now, if you start looking at trading as more of a marathon than a sprint, you're going to be amazed at how much quicker you can pick things up and how much better you're going to do. It's all this stupid YOLO stuff that kills you. So something I've been talking about with our students at the academy, at the TWC Trading Academy, is this idea that proper risk management is the end all be all to it, right? And why is that? It's that because it's your losses that are killing your account. It's not the fact that you're winning here, you can't quite win that much or whatever. It's the fact that you lose so damn much, so damn often. That's what kills you. It's not the fact that, oh, you're not a great trader and you're not getting 10x and 50x or whatever. That's not the issue. The issue is you let that damn price pull back against you 20%, 30%, 50, 80% on a single trade. It makes no sense. But you're scared to lose a little bit, right? But losing is part of the game. If you're a trader, you have to absolutely get comfortable with loss, but you have to lose intelligently. It's not like, oh, I need to get comfortable with losing 50%. That is not going to do it at all, right? And so we've had a lot of discussion about this in our live tradings that we've been doing this week, because, again, part of what you get when you join the liquidity cartography cohort that we have there is that you get these live tradings with me at least 3 times a week. And I always said, I did it. It's like, oh, I'll just do it for an hour because I've just got so much other stuff I have to get done. And lately we've been doing 3 or 4 hours, at a time. So it's basically all morning, right? But what I love to see about that is I get to see people like, I see Sats is over here in the audience, people like Sats, people like Jonathan, who constantly, and I bring them up a lot because they're the ones out there constantly talking, right? Constantly sharing their trades and whatnot's going on there. And what you see, if you've been a part of this, what you would have seen is their change, right? You see how they continue to develop as traders, and it's absolutely amazing. I know Jonathan just mentioned today he took 2 trades. He had one in the, oh gosh, which one was it? MNQ, I think. And then one in the MES. And altogether, he got something like almost 40 points. Absolutely just a banger trade there. And he's not here in the U.S. He's on the other side of the world. So he's staying up later to do that. But, I mean, just, again, he mentioned that being here 6 months has absolutely changed his trading. Because now he doesn't, or it's very, very, not often, but it's the opposite, right? It's very rare that he actually gets caught up in chasing trades and and revenge trading or anything like that, or not taking profits, right? And he says that's changed entirely his whole outlook. He enjoys trading so much more now. But these are based on the things I'm talking to you guys about here, which is proper risk management. It's not about anything other than the one thing that you can control is how much you lose. And the one thing that's going to affect your account more than anything is how much you lose, not how much you win. Okay? It is how much you lose that affects your account so significantly. So if you take proper risk management seriously, you are doing the heavy lifting of getting yourself on the way to being a consistently successful trader. And so, again, I deal with these things. One of the things, that I deal with is with what I do here in this space is, you get a lot of nonsense and people like, oh, you can't trade, whatever. Well, again, these guys get to see me trade at least 3 days a week, every week. So, if anybody's ever saying that, they have no clue, obviously, right? And sometimes I don't even do as good as some of our students that are on there, which is pretty great. And sometimes we'll have our head traders like Vince or Andrew jump in, and they'll be talking about trades they're doing and trades they're looking at, or maybe a trade they just got in as well. So that's really kind of, a lot of fun out there that I get to spend that time to trade, live with our students there. And we get to trade those futures contracts. And then also while we're doing that, and if price action is a little slow, I pull up a Bitcoin chart and I talk about that. And I'll pull up a gold chart and talk about that, or whatever else is going on there. This last week, I pulled up a couple extra stock charts that I've been looking at for breakouts and talked about those as well. So, again, just getting a lot of trading in there. But here's the thing, guys, wherever you go to learn, I think absolutely you should come to TWC. I don't think there by far is a better place to learn, but you have to be serious about it, right? You have to actually do the work. You can't just show up and, join and then just be like, oh, sit there and don't do anything. You've got to do the work, right? Oh, Bernardo says, don't forget about the singing. Yes, you get to listen to me sing too. I don't charge extra for that, though some people probably wish I would, so they could be like, oh, I'll opt out of that. Sat says those live trading sessions are amazing. I've learned so much from them, and it's for me, it's how can I help you learn to trade, right? So we have courses, a course vault in there where you get to learn all the theory and how to do everything and all the basics, right? And then we have 3 times a week, we have the live trading sessions. So we do Wyckoff on Monday, price action on Wednesday, Elliott wave on Thursday. And we try to bridge that gap between theory and actual charts, right? And then you get the live trading. And we do the live trading, guys, on the 15-second, 1-minute time frames. So if you think that you want to be a scalper, or you like to do that, or, maybe you don't know exactly what it means to be a scalper, that's what we're doing. Or those shorter term trades. That's what we're trying to do on those daily trades. Not holding anything overnight. We're just trading on the day there. And so you get a lot of access to a lot of different ways of looking at markets. And if you're paying attention, you see how you can apply these things to understand where that liquidity is showing up, whether it's on a 15-second or 1 minute, which just means you have to think quicker, or, a 4-hour, a daily, a weekly chart or something like that. And of course, if you're joining in there, you also get access to Fibbo and his threshold theory, which is pretty great. That's a system, right? That's a system on trading, and it's got rules, and you follow the rules, and not every trade's a winner, but his system for him is proven to be successful over time. And that's what you should be looking for, right? So that brings me to point 2 real quick here before we jump in the charts. Okay. The point 2 is that, so proper risk management is the first thing, but the second thing is you have to get out of the mindset of looking at every trade by itself. Like you get in that trade and you're thinking, oh my God, how much money can I make on this one trade? And how great would that be? Blah, 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 right? Because you're focusing on the wrong thing. You need to focus on the system that you're developing, because as you develop that system and you focus on that, that's going to force you to focus on proper risk management, everything as well. And what that means is focusing on the system allows you to find out where it needs to be adjusted, which means what? It means your trades start turning out better and better and better, right? And so as traders, when we first come into the markets, we don't understand this. We don't understand the importance of risk management, or even, especially proper risk management. We sure as heck don't think about trading as a system versus, we think about it as the one trade we're on. We go scanning through charts. Where's the trade? Where's the trade we can take? Oh, I'm going to get emotional and FOMO because this looks like it's going to break out, and we don't worry about stop losses and where they're going and whatever. we are our own worst enemy, y'all. And I hope if you've, come, viewing this live stream, or you've been viewing for a while, I hope that's something that's really kind of sunk in with you, because those two things, if you cannot accept those two things and make them a part of who you are, you will never be a consistently profitable trader. It's impossible. The things that kill you, that keep you from it, are not using proper risk management and focusing on each trade individually as if it's all that matters. Does that make sense? Let me see here. Florian, what's up, man? He says, I've been with TWC for about a month and learned more than I have in other platforms for 2 years. Forever grateful. Man, I love it. I love it. And I'm, guys, listen, I put a lot of hours into what I do at TWC, which is why I usually don't work the weekends. Though you'll see Andrew and Vince and Fibbo usually, talking, giving some analysis or trades that they're putting in the weekend. But for me, I work so many hours throughout the week, and then I use this, the weekend where I can spend time with my family. Because at the end of the day, listen, folks, we're about to jump on here into the charts. But here's the thing. I'm a firm believer that at the end of the day, trading should bring you freedom with money, right? What I mean is, you should be making, the whole reason you're trading should be that you make enough money that you have freedom in decisions and time. Trading is all about freedom, guys. That should be your focus, to graduate. And it's not going to happen overnight. You got to get it. It's a marathon, not a sprint. But if you get your things figured out right up there at the beginning, that's going to build on itself. And, depending on where you start out, it might take you a little bit longer, a little bit shorter time to get where you want to be. But if you're not doing it anyway, what are you going to do? You're going to be doing the same thing you're doing anyway, right? So why not put the focus in there and do it? So right now, what you can do right now, if our price, normally we charge $179 a month, $1,790 a year. You get a few months free there. But because of Bitcoin's new all-time high here, I went ahead and I'm giving you 50% off. Use the code Bitcoin, okay? And you can jump in there on a monthly or an annual basis, and you're going to get 50% off. And so if trading is really something that you're serious, honestly, you're serious about, I want serious people in there. I don't want you wasting your money, guys. If all you want to do is just buy and just kind of hang out and that's it, don't do it. It doesn't benefit you. That doesn't benefit me. But if you're really serious about it, I bend over backwards to help you out in there. I answer questions all week long, and I expect you to have questions. A lot of these, I don't know. I've never joined any kind of trader education service out there before, but a lot of our students have, and they tell us, different things about it. And one of the things is, you rarely get feedback. You rarely get questions answered. They act like, I don't know, like you're bothering them if you're asking questions. I get bothered if you're not asking questions, right? Because that's the only way you're going to learn. And if you're out there interacting with people like Andrew and Data and and Bernardo and Sats and Jonathan, everybody else that's out there that you see them constantly talking out there, I guarantee you that your learning curve is going to go much quicker. You're going to get up that learning curve much quicker, because you're that as a human being, that interaction, that back and forth, that thing that we do, that helps us learn whatever we're trying to learn that much quicker. So just some thoughts on just trading in general, guys, there. And some of the things you can expect with us. But I won't have this code up for long. So you can jump in it while you can. And like I said, half off, guys. So, jump on it, get it done. And, thank me later. But let me go ahead and jump in the charts here, guys. And I would say definitely sign up for Hash and Hedge at hashandhedge.substack.com. If you really want to understand Bitcoin better and mining better, because it will give you a better understanding of ultimately what's going on with price. So let's go ahead and jump on in here. Let me see here. Yeah, here we go. And by the way, guys, something I've wrote about recently in Hash and Hedge, and something I want to bring up here is, listen, Trump said, you might remember, I think it was earlier this year, he said, I want to make the US the Bitcoin mining capital of the world, right? And a lot of people don't understand what I believe he really meant there. Because right after that, there was the leaks about the notes with the Fed and whatnot. Then we're talking about Bitcoin as a Bitcoin strategic reserve, right? So here's the thing: you hear that and you go, "Oh, Bitcoin mining capital of the world, whatever, price go up," right? Well, here's a better way to think about it. Going forward, more wars are going to continue to be fought on cyber. There's going to be cyber warfare, right? That's what we're going to have. And there's still going to be kinetic warfare out there, right? But we're going to have a lot more with the cyber warfare. And so when you put things into a system where hash rate, your hash power, determines how secure you are, right? It means that the person who has the most and who uses the most energy, right? The person who collects the most hash rate puts out to be the most secure, right? The more defensive, the most defensive cyber area on the planet, right? So why is that important? Well, because if Trump's serious about that, what we're going to see is incentives for Bitcoin mining to come into and remain in the US. What does that mean? That means exahash, right? All on the US side, right? And so if the Pentagon starts using this, and again, you're going to want to look at like fiscal year 2027. Watch on that. Look for some kind of line item on there that talks about it, right? Again, read what I wrote in Hash and Hedge. I believe it was in that, and you'll see that. But if you're doing that, all of a sudden, all this Bitcoin mining, which is proof of work, right? That's where we're getting the hash rate from. All of a sudden, that becomes a very significant part of national defense. So where is Bitcoin going? Where are Bitcoin miners in general going? Well, if that happens, what do you think? If you're concerned about just price, all of a sudden you need to look at that, right? You need to be a little bit more conscious about that. We're not talking about Bitcoin treasury companies, LARPing and whatever, adding Bitcoin to their balance sheet for price to go up. I mean, that's something to watch as well. But we're talking about real world use cases for proof of work mining. I mean, it's hard not to get excited about the future of Bitcoin and its price, when you understand this. Okay. Oh, I truly have the gift of gab, John. Oh, I'm sorry, buddy. You can go ahead and leave, though. I promise we won't miss you. I don't know why people see. I don't get this. I don't want people to come on and act the fool. Why would you come on and act like a jerk just because you can? It blows my mind. I come from a different time, guys. I don't care. Move on, man. See, the sad thing about somebody like this is it sounds like he probably hasn't listened to me before, which means he's not paying attention, right? He doesn't get it. And there's too many people out there. And you know what? If that's you, it's you. It is what it is. But move on. Do yourself a favor. Why would you waste your time here? If you feel like it's a waste of your time, why would you stick around? Life is way, way too short to sit there and waste time with something you're not interested in. Seriously. Don't embarrass yourself and come out and act the fool. I mean, how embarrassing. My God. If my son did something like that, man, no way. Anyway, just kind of getting on there. But this is a podcast, so I don't know what we're supposed to do if not talk, right? We don't play music on here. Okay? We don't play music on here. We talk, right? But anyway, so here we are with Bitcoin right here. And we've had this great, another great breakout, right, guys? I have been consistent in telling you that the top is not in and it won't be in for a while, right? Nothing but consistent. Set you guys up. Talked about this being a likely place to buy. Those of you that have been here know, right? We talked about this being a likely place to buy. We talked about this right here being a likely place to buy. And so we continue to nail it. We continue to get it right. Big picture, price continues to go up. And so here we are again, just doing the same thing. There's no, again, guys, something I've talked about here is we had this resistance that built this base here, right? As we came down, popped out above it. What did we do? We built a base on top of this base. Low volume node here doing its job. Market's just not interested in there, right? So you get a little dips down and back up, and you're finding all your volume coming in right in here, right? Setting up again. What do? We popped out again, guys. Here we go. And so, again, I think we continue going higher overall, right? Right now, we're almost at 120,000 on this move up here. Let's zoom in a little bit. Let's look at the 15-minute here. What do we got going on here? Let me draw whoops, hit the wrong one there. Draw a channel here. You have to forgive me. I'm working on my laptop at the moment here instead of my desktop, so I am very uncomfortable trying to use it here. All right, so here's what we're kind of looking at here, with this. And at first, we were talking about this morning, potentially looking at this as 3 waves down. So we needed to break out above here to get the breakout higher, right? But we came down further. So, okay, that's fine. So we've got an ABC here and an ABC. So this gives us a double zigzag, a W. And then we have an X. And here we go with an A, B, C may be done here, right here at this previous area, right? So now we're looking up. And what are we looking for? Well, we're looking for a breakout above. Let me see here. It looks like it's maybe this one up here. Let me see that thing on there, right up around here. So on this chart here, now this is the Bitcoin all-time history index, okay? So you have to figure out where you're on your chart, whether you're using Binance or Coinbase or Kraken or anything else. But you're looking at this one right here. As long as this low holds here, breaking out above this, it's going to be about 118,100 area, is going to indicate that we should be breaking out higher. So based on the height of this pullback here, that gets us a 120,100 or so target. As long as that holds right there. And that's looking pretty fantastic on there. We almost reset the 15-minute into oversold here. We reset the stochastic RSI, and so that looks great. And we're just pulling back here to the weekly R3 pivot. Now, generally speaking, I've talked about this so many times before on here, right? Again, guys, talking about real alpha here. So those of you that have been following know that for a few years, all I did was trade pivots, right? To learn the best way to use them, how they work in some setups, right? So one thing that we know is when we get, when price is moving very aggressively through like your R2 pivot, most often you're going to get at least R4, but usually you're going to hit that R5 and potentially even further than that. So the idea that we hit here, potentially at 120,140, that's the R4 pivot here on the weekly pivots. Absolutely makes all the sense in the world, and wouldn't be surprised to see us doing 123 or more coming out of that. So, I mean, when you're looking at this, absolutely fantastic. And now here's the thing. We're coming into the weekend. So I don't know if we go from this here, if we pull back a bit more first and then go. But if we were to lose kind of this 116,500 area, I wouldn't be surprised to see us get down here around 114.5, 114,000, 114,005 here if we lose that. But as long as we got that, we're breaking back up there. I mean, the setup looks absolutely amazing for us here. So, that's what I want to see. That's what I want to see. I want to see us sticking above, hopefully above this 116.5 area here. But again, if we do drop on down through there, we might maybe even just kind of wick down below this. What is this? 116, basically 116,000 area here, down into that 114, 114.5. I'm sorry, that's 115 here. 115.200. So yeah, again, if we continue breaking down, we'll likely get picked up in this area, I believe. Low volume node. Market's just not interested in that. But ultimately, looking for that breakout above 118 to get us going higher on there. So, what does that mean? Does it mean we definitely have to go up higher? No, but I'm looking for that breakout there to kind of say, okay, we're going to go out higher. Okay. Let me see here. Y'all sing us some Tom Petty. Let's hear some George Strait. It's good stuff. Two people I love to listen to. So, being here in Texas, of course. But loving that. Ethereum. All right, guys. Be honest. Were you on the Ethereum hatred side? Are you still on that? Do you still believe that that Ethereum is dead? Those kind of things? I mean, come on, guys. I've been talking to you for quite a while now about Ethereum and about the idea that it was still going to break out and make a new all-time high. All-time high is 4109, guys. Down here, everybody's crying about Ethereum, talking about it was dead, it wasn't going anywhere. And I was talking about, hey, you need to be buying some, I think. Because when it does go, it is going to outperform Bitcoin. There's no two ways about it. It's an alt, right? It is, it's a beta compared to Bitcoin. You're going to get greater return. And so what do we see here? From this point, guys, this was only April 9th. This was only April 9th. Up until today's high, that's about 120% rally. 120% rally. 3 months, guys. Holy crud, right? Even in this area, people were still complaining about it. But my God, look at how great this move is here. We've got this great range. We've got an amazing spring down here. And I talked about this being a spring. Rallied up, popped out, large candle spread. We did have a spike of volume, which is what we like to see when we're breaking out, especially through pivots. A retest of the pivot. My God, man. Y'all should have at least been buying this breakout right here at 2637.96 on this chart here. You should have at least, because the setup was there. We had the spring. We had the impulsive breakout and close above the monthly pivot. We had the retest of the monthly pivot, and then we had the breakout here. I mean, minimally, your trade, something like this. Minimally, you could have done something like this, right? And say you're looking for a 2R. Well, I mean, there you hit your 2R right over here. That means you're making $2 for every dollar you put in there, right? Now, how would I have taken this trade? I talk about this all the time, again, with our members, right? So we have this basically this sideways here, right? And this is important sideways because it comes from all the way over here, right? Now, what do you know? Let me kind of zoom in a bit here, maybe so you can see a little bit better here. But what do you notice here? So you have the breakout up into it, pulls back, retest here, rallies up, black candle here on the pullback. My long is like this. If you're not in down here and you're trying to get in here, this is what you do. And you stick it behind that black candle right there. Now, that same 2R trade you did is now 4.43R. So you're making, instead of $2 for every dollar you risked on that, you made $4.43. But even if you were just looking for an area, a solid, target area here, R1 pivot, that's still a 3R trade right there. Absolutely beautiful. And if you're thinking about longer term, again, getting up above the all-time high there, you've potentially got a position here where just breaking out above that gets you almost 17R. Makes you almost $17 for every dollar you risk. You put $1,000 in here, you get 17,000. You put 10,000 here, you get 170,000. And that's just barely breaking out above the all-time high, right? If we're just barely breaking out overall, we should expect it to run higher. So, yeah. Crazy times, right? Let me see here. Bamboo, what's up, man? He says, I had just recently someone on X calling a Wyckoff distribution range, of course, without volume or label. Isn't that always what happens? Bamboo is somebody who'd been with us for, quite a while, and also went on and got his Wyckoff certification through one of the certification companies out there as well. So yeah, great stuff. He said, I said it's reaccumulation and presented a chart with the correct labeling. Guess who was right? It was on Ethereum, since we're talking about Ethereum. Yeah, I love to hear that, right? I mean, that's what it is, right? Because otherwise, people get out there and they can sound so convincing. If you don't understand Wyckoff, right? And somebody throws up a chart and says, oh, it's Wyckoff accumulation or distribution, and they're not referencing volume and price action at all. They're just saying, oh, it looks like this picture. Just run as fast as you can for the other way. That's what Bamboo's basically telling you here. Just run, because you absolutely have to have a volume and price action relationship. You have to understand that relationship in the range in order to talk about whether it is distribution or accumulation or reaccumulation or redistribution. And the thing is, many times they're going to look damn near exactly the same. Those charts that they put out there that show you the kind of thing there, and they say, oh, what's that? That is used to train people to understand the different phases and the different areas within the range. That's all that's there for. That is not what Wakofians use to actually understand if the range is accumulation or distribution. So yeah. Yeah, I've got Saul coming up here, Colton. I see you here. Yeah, I've got Saul coming up here. I've got it in the wings, waiting to be pulled up. You might see it on the tabs there. So, again, guys, you have to be careful when you're out there. If you don't know what you're doing, you absolutely have to be careful with what you're listening to out there, right? Because a lot of these big accounts are going to make it. They got big for a reason, guys. They told people what they wanted to hear, right? They made things sound convincing, even if it wasn't reality. Okay? So you have to be careful out there. You have to be careful with that. And Wyckoff, unfortunately, is one of the worst out there, because people think they can just throw a schematic up there. Again, like I said, that's generally used to teach people who are learning Wyckoff's, method, how to understand the phases and the different points within the range and the price action relationship. And they say, okay, it may look something like this. It's just a generic kind of chart, right? But it's there so you can understand the phases and whatnot. It's not there to put up there and say, oh, look, it looks like this. We're going to do this. And it's unfortunate people get caught in that. But this is your warning. I'm telling you guys now. Be careful. If anybody ever says this looks like accumulation or distribution, and they're not talking about how that volume and that price action relate at different points within that area, just assume that they're really guessing. That's really what it is, because you can't tell off price action alone. Okay? Yes, schematic is just meant as a template. Exactly. Wasn't the all-time high for Ethereum closer to 48? Did I mess that up? Did I get it a little bit close here? Let me see. You might be right. Let me see. Oh, yeah, a little bit higher up here. Yeah. I forgot this one way over here. Thanks for bringing that up. Way over here in, what is that? November of 21. Yeah. So the cycle high is this one right here. But yeah, we should definitely be heading up above 4,800, guys. I believe we're headed up above 6,000, with Ethereum. So I'm right now, the way I'm looking at this, to me, looks like a leading diagonal. So 1, 2, 3, 4, 5. And then we have our, 3-wave pullback here. And we've broken out above that second wave right here, which signals that low should be in. We should be heading higher overall. If we jump out to the monthly, look at the monthly. That monthly stochastic RSI hasn't even reached neutral yet. It's just getting going. Monthly RSI here. It pulled back, bounced at neutral, remained bullish above neutral, and is crossing bullishly this month on the SMA there. So it looks absolutely amazing as we look for this to continue higher on there. So I continue to like Ethereum, something I've been talking about for a while. Let me jump over here. So since we talked about Ethereum, let's just jump over real quick to Ethereum Bitcoin. So here we are here. And generally speaking, this does appear to be reaccumulation here. We've got a great a great decrease here in volume throughout the range, especially as we're kind of coming down here. We've got a spike of volume on this pullback right here, which becomes controlling. And guess what? Then we broke out and closed above it. So this now becomes a support, and boom, there we go, continuing to rally up. We got good volume here. Decent candle spread on that breakout above the, this is daily, so the monthly pivot. And we've got follow through up to the R1 pivot. Now, I wouldn't be surprised to see us get a rejection somewhere right around here and a pullback down here, potentially as low as this pivot here. Let me put the prices on there and set it up for you so you can see a little bit better. Oh, come on now. There we go. So I wouldn't be surprised at all to see us get potentially a rejection here and a pullback. We don't have to, but just kind of watching it here. We are getting kind of high in the momentum. We're topping out there in stochastic RSI. We're just below overbought here on the daily RSI. But overall, I mean, I think it could go higher. My next area I'd be looking at be right here around that 0.02935. Let me see, right there. That gets us right here where we have this support and all this resistance. It's that low volume node, which you can't really see when I'm putting it over here, but that low volume node. Again, low volume nodes tell you the market's not interested. If the market's not interested, guess what? You're not getting, if you're trying to buy, you're not getting anybody to sell you in that area, really. If you're trying to sell, you're not really getting anybody to buy in that area. So price often reverts back before breaking out. You don't normally get a strong push straight up and through a low volume node. You'll hit it a few times, and then you'll push through if you're going to push through. Because the market is just not interested. That's what that VRVP there is showing you. Volume by price level there. You know, on that all that time frame that we got on that chart there, it says, yeah, not really interested. The market's not really interested. So you either have to get a strong pop up through it to carry you to the next higher volume node area, or you're going to get rejected and pull back. And like I said, usually a few times before you do. And so we can even see it locally, right? We can see this playing out locally. Lowish volume node here, right? All that support in there just wouldn't go through until it finally did, right? But look here, resistance, resistance, resistance. Here we go, resistance. So when we do, the next time we really kind of push into it, whether it's here or we pull back and push through, we should probably run up through it locally there. And again, this shouldn't be any surprise. You know, Ethereum is an alt. It's going to outperform Bitcoin. Alts are going to outperform Bitcoin in general. But Bitcoin isn't just about, as I've been saying, price go up, right? There's more to it than that. And even if you're not so interested in understanding it as a form of, you know, proof of work, hash rate as a form of defense, right? National defense, you can still think of it in terms of protecting you against debasement, right? Against the continued printing of fiat. We're not going to go, and guys, stop with the nonsense. We're not going to, the US dollar is not going to go into hyperinflation anytime soon, okay? That's a complete misunderstanding. Everybody goes back to Weimar Republic and all this other stupid stuff, and they just have no understanding of why, you know, hyperinflation generally tends to come through. And with the US dollar being the world's reserve currency, it makes it infinitely more difficult to hyperinflate. That doesn't mean we won't potentially continue to see, you know, inflation picking up in the price of goods and whatnot, but, you know, the dollar itself is not in some really fragile position where it's going to potentially hyperinflate. So, but just because I said that doesn't mean that Bitcoin isn't going to continue to do well. I think a lot of people out there that don't have a background in any kind of economics or finance or anything like that, I think they feel like, you know, they have to buy into the narrative that it's going to hyperinflate, in order for Bitcoin to do well. So about 4 or 5 years ago, Dorsey wrote a tweet where he's talking about, oh, hyperinflation's here, it's coming, it's here, whatever. And man, one of my most hated replies I've ever gotten online. And I said, it's not. I said, that doesn't compute. It doesn't make sense. It's not there. Precisely because, the setup was there. Does that mean that inflation didn't come? No, inflation came, but it's always interests me. If you didn't live through the late 70s and early 80s, this right now feels like the end of the world, especially with, again, the big talking heads making a lot of noise online about it, right? Because this kind of inflationary scenario that we have in terms of price of goods and whatnot, right? We haven't had since that point. But that was 81, 82 when it finished out, when it started pulling back. Volcker was up there, was the head of the Fed back at the time. Guys, that was what? 90, 2000, 2010, 40, almost 45 years ago. Just a similar situation in the price of goods and whatnot, inflation that we're dealing with here. Oh, but so much dollars have been printed. Yeah. Okay. So let's talk about that real quick. Here's the thing. I'm not a fan of continuing to print dollars. Okay. I'm not going to say I'm not. But the reality of it is, as long as demand remains for those dollars, you can theoretically print infinitely, right? The problem becomes when there is a significant change in that demand for those dollars. That's where it changes. And guys, right now, well over 50% of trade that goes on in the world is done in US dollars. Period. End of sentence. That's not changing anytime soon. Okay? So, just because the dollar isn't going to hyperinflate anytime soon and whatnot and all that, doesn't mean that Bitcoin still isn't going to do well. You don't have to, they're not, you don't need one for the other, right? We can just continue doing what we're doing. We're going to go up there. But yeah, again, I'm not a fan of printing dollars more and more and more, but at the end of the day, as long as demand for dollars remains significant enough demand, you can continue printing. And it's going to throw people off because they're going to continue complaining and saying, oh, it's hyperinflation, blah, blah, blah. And they're going to continue to be wrong. Okay? Bamboo says about the demand of dollars, just wait and watch the stablecoin super cycle unfold and you'll have demand for dollars like never before. Yeah, I mean, there's a good case in point for, US treasuries and dollars, stablecoins. And stablecoins have been the best performing asset, right? This last year. Everybody wants in on the stablecoins. Everybody's creating new stablecoins. Circle went public. They were quoted at like $29 or $31, something like that when they went public. That thing shot up to, beyond $100. What, $300? I think it's pulled back to around 100 now, but still insane appetite. They're stablecoin, right? So these are things you guys need to kind of pay attention to more so than just the initial emotional sound bites that are out there. So I guess my suggestion here would be, if you hear something online and you get very emotional very quickly, step back. Before you do anything, step back. Take a break. Step back. Relax. Because you can't form cogent thoughts that make sense when you're freaked out, when you're emotional, right? This is why when you're trading, you have to have a system with rules figured out. Because that way, when you're in the heat of the moment and trading's going on and things are moving really fast one way or the other, you practice. So when that happens, you don't have to think emotionally. You just follow the rules of your system. That's the key, guys. That's the goal. That should be what you're focused on if you're trading. Okay? So yeah. Look good there. Let's see here. SPY again, man. Look at all-time high over here, right? Everybody and their grandmother. Oh, it's the end here. The top is definitely in. This is called climbing the wall of worry here. Everybody all the way up here. The top's in, the top's in, the top's in, the top's in. Oh, maybe not. Right? So there's the SPY. SPY looks great right now, honestly. Again, let me kind of set this back up here so we get these prices on here. Make it a little bit easier. Let's zoom into like the 4 hour here. Look at that 4 hour. We're range bound right here. Again, I'm telling you guys, Wyckoff is such a huge help once you learn to identify ranges properly, right? But if I'm looking here right now, I'm telling you right now, just looking at this, if we're going to lose this pivot area here, I'd be looking down at the range low here. I'd be looking for a potential sweep down here. And then more likely than not, you can see that we've got this low volume node here. More likely than not, we'll get a wick down into that. And then we'll pop out for a new high. And we'll continue pushing higher. The S&P, the NASDAQ have both made new all-time highs. The Dow is not yet, but it's pretty close now at 45,000 area. Okay? So, we should be looking further, higher up here soon, right? Let me see here. But yeah, I don't think that the top is in for SPY yet. I don't think it's in for the NASDAQ. Certainly not in for the Dow. As a matter of fact, those of you who have been following me for a few years, I guess probably about 3 years ago. Let me see. No, 2021. So I guess it was probably about 4 years ago when we were breaking out, above that 28, 30,000 area. I said, what's likely going to happen? Because before that, I thought we were going to have a top there. If you guys are following me, and I was talking about potentially the beginning of some big, like depression, right? And then what? We started pulling back, but we never got a blow off top. And we got that 3-wave pullback. And right here on this show, I'm like, listen, I think we're actually just on a pullback. We're head up higher. And I don't think we hit, a full on any kind of real recession, depression, something like that until we're hitting 50,000 on the Dow at least. And so here we are now. We're nearing it, right now, 44 and some change. All-time high at 45 and some change. So, we're getting pretty close to there. But, you've had 4 years to kind of deal with that and continue to buy and freaking just hold on that, right? Bobby says, I think 5% drop on SPY will have everyone panicking. Everyone's going to panic on everything. That's the thing. Everybody's been panicking for years. Have you guys seen that? I mean, if you pay attention, everybody's been panicking basically since the bear market low in back there in 2022. Everybody, since the Bitcoin bear market low there, everybody's been panicking constantly. And one of these days, they're going to get it right. The top's going to be in. And they're going to parade that around like they did something special. But you're going to know better. Because you're going to have watched them multiple times a year telling you the top's in. It keeps going up, right? I've been pretty consistent on what I say here. Because nothing else really makes sense. Gold. Here's gold. Look, we are just range bound on gold here since April 22nd. So range down, between that April 22nd high and this May 15th low. We're range bound here. Now I'm looking, there's possibly here, maybe this is this may be a triangle here with this consistent consolidation. So you get an A, you get a B, you get a C, and you may have a D and an E, or you may still have D to come, and then E will probably be a pullback down here. So we rally up to like that R1 pivot at around 34.39. Maybe get rejected around there, pull back here toward 33.44 or so, or even 33.20, right around this area here. I think that may be what's going on. I don't think D is done here. I think this is still D in progress here, and then we'll get a 3-wave pullback for E, and then we'll go up. And so based on the height of this pattern, that's going to give us a pattern target up here around 37.72. Now, it doesn't have to stop there. That's just a pattern target, just a price action pattern target, a wave 5 Elliott wave pattern target that we often use to get us going. It could stop short, it could stop above, but this gives us a place to start. And so what we would look for is Bitcoin here. Let me see here. To continue again up here and then 3 waves back down to about this area. And then we look at the do we get like a 1, 2, 3, 4, 5 kind of thing going up here or what? Toward that park, at least there. But with the length of time we've been going sideways here, I would expect a nice strong push out, kind of like what we've had here with Bitcoin and this push out here. Again, sideways here from May 22nd to June 22nd. And we're getting a good push out here. Same idea with gold. The longer you spend consolidating here, the stronger and further the push out generally is expected to be. Let me see here. Yeah. So gold looking all right there. Sol, let's look at Solana. Solana's hit this next area up here, which we were looking for it to hit. Oops. Yeah, dug it. Again, using my Mac here, I have to remember what it is because my desktop running Linux on that. But anyway, so yeah, so again, where would we expect to get up to? Right here. This is where we're getting. So we're good. But big picture here. Let me see here. Let me zoom out to the weekly. I mean, look at this beautiful bounce here off the S1 pivot. I was talking about the time that would be a place to look to get a to buy down there. This is the S1 pivot on the yearly, so we got it. And when you do that, your initial target is always the pivot. So you minimally could have got in from around $96, $100 up to about $180. This is a 3-wave pullback here. So do we break out above this third wave, the second wave right here at 168.36? Well, today we went up to 168.20. So we haven't broke out above it yet, but we're almost there. So we want to see a breakout here. God, dog, get off there. Let me see. Here we go, right here. Above that 168.36. If we can do that, that should indicate that wave 2 is complete here. And we're heading up in wave 3. So our pullback here, right there, just around the 61.8 retracement at the low volume node. I mean, it's just a perfect setup, right? It's everything set where we need it. So that means in terms of targets overall, we should likely be looking. I mean, obviously there's never any guarantees, but based on this, 3 waves up at 377.57 from here, 1, 2, 3, minimum expected. Minimum expected wave 5 target at 489.24. So absolutely fantastic. And by the way, if you saw me on this show here and you saw me say it was a good buy there at $9 and you bought and you've been holding on about it, let me know. I want to hear from you. Maybe I'll bring you on and interview you here on a Friday. Find out what made you do it, what made you so confident they felt about it. But, again, I talked about that was probably the low there. That was probably the second biggest bit of hate I got when I said that on the show. Oh, so much hate mail. It was awful. But yeah, I'm liking Sol here. Impulsive weekly candle, breakout and close above 180.50. We'll add much more confidence to the idea that that low is in and we're heading up there, minimally up there to 489 or so. Probably higher, but at least based on that count right there, that's where we'd be looking to go. Let me see here. So let me see. So that's Sol. What do I have here? Link was another one, that we talked about. Where we talk about it? Oh, we talked about it way over here. Those of you who've been following me know that we were coming down here, and all this time I've been talking about this was looking with the volume and price action like it was accumulation. And I said, we're probably up here. I said, we're probably going to break down. I said, buy that breakdown, print a spring, and we'll go. That's what it was. And so we did really well off that coming out there. Locally here, what I want to focus on is locally here. We've got a 1 and 3 waves down 2. Now that's a deep pullback. It pulled back about 78.6. But we have now broken out today above wave X there at 15.663, which adds confidence to that wave 2 count. Wave 3 minimum expected target at 27.79. Wave 5 at 34 and basically 64 cents. We're also getting, a breakout here of the descending resistance. It's just hard to see anything really ugly about this. It looks great. Whoops. Yeah, all we did was pull back here to where this previous kind of low was, where we were getting closing here. I mean, that's all we did right there at the EQ of the channel. Getting a nice breakout here. Again, kind of like on Sol there, if we can get a weekly candle to impulsively break out and close above the yearly pivot here at $19.668, so almost 67 cents. That'll indicate that that low should be in there, and again, we're headed up. So locally here, the next step is that move up there toward 27.79 and then 34.64 on link there. Let me see here. Link on the retest, the range was solid. It really was. It really did well. And so, yeah, so that's what I'm kind of looking at here. So, I mean, again, guys, you're out here, you're fighting the noise that's out there, in the markets, and not even so much in the markets. The noise really is here, in social media and what's going on with that. And that's your hardest thing that you have to deal with outside of yourself, right? But right here for Bitcoin, we're looking for the breakout above 118, 165 area here. And doing so should give us a pattern target at up there about 120,150, right up there, depending what you're looking at. So I hope that makes sense, guys. And I hope you're out there, taking your time and being, again, when something comes up that sounds really, that makes you feel really emotional, do yourself a favor. Don't do anything immediately. Step back, take a deep breath. Take as many deep breaths as you need. And that way, what it does is it slows down your heartbeat, slows down all that stuff that's running through your body that gives you that fight or flight. And once this stuff slows down, you can start thinking clearly. You go, okay, well, does this really make sense? A lot of people lost money worrying about that $8 billion move, with Bitcoin, or, worrying about this. And it's just stupid stuff, guys. Okay. So that's all that, guys. And that's all I have for today. So, again, I think bigger picture is everything really kind of just goes higher for longer. The dollar, still hasn't really broken out of that downtrend it's in yet. And so it's possible we could see that still pulling back lower as well. That was my third, probably biggest thing I got hate on, was the calling that the dollar was going to hit down there mid-90s and lower. But again, you can't worry about what people out there are saying. Once you start figuring out how to read charts and markets and what's going on, just deal with what you're dealing with. Stop worrying about what everybody else says. And you're going to make wrong calls. I haven't been 100% right, especially on shorter time frames. You won't be. But that's why proper risk management is there, to protect you, right? Does that make sense? That's what you got to figure out. That's what you got to worry about and focus on. Let me see here. I can see the .USD here real quick, and then I've got to go. Let me see here. Let's pull this up here. And I think if I'm not mistaken, looks a lot like a lot of other alts at the moment here. Let me see here. Where is it? There it is. And don't forget, guys, you can get in for 50% off right now. Go to members.texaswestcapital.com. Liquidity cartography cohort. I can't even say it. And you can get in, even on the monthly, you can get in for 50% off, guys. Take advantage of it while you can, because we're not going to be doing a sale here for a while, if we do one this year. If we do, yeah. Let me see here. I've got DOT looking up here toward, we just about hit it here. Have a minimum expected wave 3 target here at $4.17, basically $4.17.5. But this right here is a 1-2. So if I'm actually doing this, I can write this in here. Where's the low here? 15, 33, 11. What I think's probably happening is we're going to get an overextension here, because this locally here looks like a 1-2, potentially still in a 3 here. We'll get a 4, we'll get a 5. So my initial thought is, let me get this out of the way here. If we don't get a pullback, we may get a pullback here. If we don't, at this $4.17.5 area, if we don't, look right there around $4.24, and potentially even up here around $4.43. We're just looking for that pullback. But if we can do that, 1, 2, 3, 4, that'll get us a 5 up here. Then we have a 4 on a pullback. We'll have a 5 potentially breaking out. So I think this wave 3 is likely going to get a lot closer up here to maybe $4.60 or $4.87.5 as this interior continues to play out, right? And then wave 5, of course, will pick up higher there. But I'm usually looking at these on our evening market wraps that I do for our members every night. So we usually get about 20 or so charts between stocks and crypto. And we're usually pulling from here. So, a lot of these are trade setups that we've had. They've just worked out really well. A lot of them look pretty similar to this, where you've got a 1 with a flat as a 2, and then a 1-2. A lot of those in there. We've got multiples of those, that we've watched here and I've discussed and talked about. 1 inch was, man, look at 1 inch. 1 inch keeps going up, guys. We just talked about this last night's market wrap. So I had a 1 and a 2. And I had an initial, just a little target here, but really wave 3 is up here at 0.359. So I have these kind of pattern related targets here at 28 and 39.3 cents. But we're, here we go, heading up toward this minimum expected wave 3 target at basically 36 cents. But again, this looks like either a 1 and a 2 and then a 1-2 here, which means wave 3 here is probably going to overextend to 0.436 or even 50 to 60 cents. Because right here, again, if we're looking at this, this looks like a 1 with a flat as a 2. And then this looks like a 1, 2, and we're working on the 3 right now. And so something like this. But until we know exactly where this current run stops here, wave 3 could still continue pushing up higher. This is the range EQ right here, a previous range. And so probably a pretty good area to get it. But again, I think overall, wave circle 3 overextends at least to about 43.5 cents, maybe 50 or even 60 cents getting up there. But man, alt's looking really good with here. This week, total 3 has gone from something like 816 billion to over 900 billion as of yesterday. So yeah, a lot of really good movement on there with that. So, if you were the one thinking, that things weren't going to work out with alts and whatnot, well, here we go. Now, I don't say go in there and chase right now. You'd be kind of silly just to jump in and chase. But I would look for the pullback to get into. Generally speaking, with alts there, miners looking good as well. A lot of miners popped off that the yearly S1 pivot, rallied up into and or through the yearly pivot already. Miners looking good. Bitcoin, new all-time high. Bitcoin looking good. Ethereum looking good. So, SPY, NASDAQ, all that's still looking good. So there's a lot on there. So I'm going to get out of here, guys. My time is up. But as always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope you all have an amazing, amazing, amazing weekend. Trade safe out there. Don't chase, guys. Don't chase. Whatever you're doing, don't chase. Learn to read, to read the market and what's going on there. And again, you can do that with us over there at members.texaswestcapital.com. Use the promo code Bitcoin. Bitcoin is a promo code for the liquidity cartography, either the monthly or the annual. If you use it for the monthly, okay, so you got on the monthly, but you won't be able to use it for the annual once it's gone. So I'm going to get that. It's not going to be up there long, guys. But if you're serious about learning, you're serious to get in there, you've seen the guys talk about it on here, what they think about what we do at TWC. It's all about helping you become a better trader and hopefully along the way a better person. So there you go. Have a great weekend, everybody. Thank you so much for showing up, and follow me, TX West Capital, there on X, and sign up. I've got a plethora of free content out there, especially in the form of newsletters that go out daily, weekdays, once a week, whenever I feel like it. They talk about everything from markets to sociology, not sociology, but socioeconomic theory. And then, of course, even to writing, because I do write fiction, techno thrillers, crypto thrillers, stuff like that have to do with markets and, again, Bitcoin, stuff like that as well. So need to hear about all that. Trade safe, everybody. Remember, the only thing you control is how much you lose. So please keep working on that risk management. And I'll see you next Wednesday for Beards and Bitcoin. Take care.